The reaction we are seeing today is potentially problematic, as it could be a sign of a top just when the main market indices are losing strength near their all-time highs. So, as we always focus on practical things, the big question we are going to try to answer is, okay, but what to do right now? Well, you are watching the Finance Hydra channel, where we analyze the market through the lens of technical analysis to develop our ideas and strategies. Every single day, you receive analysis without bias, without guesswork, without assumptions, because everything we do here is based on technical evidence, facts, and probabilities. My name is Nathan. Welcome to another daily analysis. Now, as we can see here, SPY is clearly correcting. We are losing a few short and even medium-term support levels, namely on the 1-hour chart. Short-term wise, we are losing the 21-hour EMA, the exponential moving average on the 1-hour chart, which was a previous support level. Now we lost it, entering bearish territory again. As long as the SPY ETF maintains its price below the 21-hour EMA, we are not going to turn bullish again on the 1-hour chart, and this suggests more correction on the daily chart, especially because on the daily chart we see a quite problematic reaction. Yesterday we did open below yesterday's high, below yesterday's close. Now we are dropping, we are losing the previous candle's low as well, so it is not a good signal. What's more, we are losing the 610, the previous resistance level, which was supposed to be a support level, but right now we are losing this key point as well, along with a few other resistance lines over here. Apparently the 608 support level is holding the price, but today's candle is quite problematic, because if tomorrow we lose today's low and materialize on the 1-hour chart a technical lower high, lower low, we are not going to officially reverse the short-term bullish sentiment, but we are also going to trigger a top signal on the daily chart, suggesting more correction ahead, possibly to retest our next technical support level, which is the 21-day EMA, the exponential moving average on the daily chart down here. That's going to be our next major support level for the SPY. Now you may ask, okay Nathan, but a pullback over here is not enough to actually reverse the trend. Am I correct? Yes, you are totally correct, because although we could reverse the short-term trend observed on the 1-hour chart, on the daily chart, we are still far away from reversing the sentiment. In order to actually reverse the medium-term uptrend, we gotta see SPY losing first, losing the 21-day EMA. Secondly, we gotta see lower highs, lower lows. Then, and only then, we may see SPY seeking its next support level on the daily chart, possibly the 590s. However, it is not going to be easy, because again, we have the 21-day EMA, we have the $600 support level, which was a previous top level over here in January this year, top level over here again, support level over here, top level over here, support level here, and again support level here. So clearly, this line around the $600 is a major inflection point for the SPY as well. Of course, it is also a psychological number, right? The market has a thing for round numbers, and that the $600 is a quite important key point for the SPY. Only by losing the $600, we could see a really bearish scenario for the SPY on the medium term on the daily chart. Now, any pullback to the 590s could be acceptable, okay, but if we drop below this key point too much, we could officially reverse the trend on the weekly chart, the long-term trend, all right? Because as far as I know, long-term wise, the SPY is still making lower highs, lower lows, trading above the weekly moving average, the 21-week EMA, and of course above this purple trend line over here, which is connecting the previous bottom levels on SPY since October 2023. Therefore, the medium and long-term trend are still intact in spite of this bearish reaction observed short-term wise, all right? So right now, what are the main key points for us to watch? First, the 21-day EMA and the $600 on the SPY, because only by losing these two support levels, the SPY could technically reverse the medium-term trend. As far as I know, any pullback to this level could be just another buying opportunity, because if we see a bottom signal above, again, 21-day EMA above the $600, this drop could be just another harmless pullback while SPY maintains its uptrend on the daily chart. Okay, so it all depends on how we are going to react near the 21-day EMA, near the $600 area. If we see any bullish reaction in this area over here, it could be another buy signal. What if SPY doesn't? Well, if we see SPY losing this key point, then SPY will turn bearish. Then we may look out for opportunities to sell or to short. Very simple situation now. The QQQ looks a little bit more resilient, as crazy as this sounds, because I know we have a very dangerous resistance level over here, right, near the previous all-time high, making this a possible double top chart pattern on QQQ, I mean. So it is a quite dangerous place for us to see the QQQ correcting. Yes, it is. But we are still above a few key support levels, like the 535, the previous top level, now support level. Again, principle of polarity in technical analysis, previous resistance levels are going to work as future support levels and vice versa. And we have the 532, the previous top level observed here on February 7. So we have a double support level on the QQQ around this area, around precisely where it is reacting today. So it is trying to bounce off this key point today. On the 1 hour chart, we can see this even better. Okay, we see the SPY, again, SPY, I'm so sorry, the QQQ correcting back to this key point. Now we are trying to bounce. Okay, great. We are trying to maintain the uptrend. But it feels like we are inside a famous trap zone between the descending 21-hour EMA, which is squeezing the price right now, against this support level, previous resistance level over here. So we are between a very important short-term resistance level and a very important medium-term support level. Only a breakout of one of these two key points could bring something new on the QQQ. If we break the 21-hour EMA, closing above it, maintaining the price above this key point on the daily chart, okay, we are going to maintain the uptrend, short and medium term wise. If we lose the 533 again, all right, we are going to technically trigger a sharper correction, maybe to the 21-day EMA, maybe to the 522, our next technical support level on the daily chart over here. So either way, it all depends on the direction of the next breakout. We don't know how the QQQ is going to behave. We can't predict the future, all right? Remember, trading is reactive. It is not predictive. Amateurs try to predict the future. Real professional traders just react to what they see right here, right now, with the information we have, all right? It is useless in trying to predict. There is no tool. Technical analysis, fundamental analysis, tape reading, algo trading, absolutely nothing can help you in predicting the future, all right? Trust me, absolutely nothing, all right? But we can react to what we see and use technical analysis for risk management and, of course, to improve the odds in our favor, to have some nice probabilities in our favor. That's how we use technical analysis, to enhance the chances of success while managing risk properly. Okay, that's the only tool we have for technical analysis. So it is a fantastic tool for us, for every single one of us, to understand how the market is behaving and how to react accordingly to what we see using good risk management. Okay, and now how this is going to affect our stocks, because the SPY and the QQQ are making quite ugly signals near their resistance levels. The Nvidia stock is precisely doing the same thing right now because we are struggling a lot to break the main resistance level around $142 because we just closed this open gap, which we have been talking about for many weeks right now here in this channel. We just closed this gap over here because gaps work as magnets for the price when trends reverse. Right now, gap closed, target hit. Now Nvidia is losing momentum. All right, that's totally expected. That's absolutely not surprising at all because we are losing momentum near a resistance level. That's the best place for us to see any stock losing momentum. Okay, now, is this frustrating the bullish bias over here? No. On the daily chart, why? Why? Because on the daily chart, we are still above the 21-day EMA. We are still doing higher highs, higher lows. We did a pivot point over here on the daily chart, so we are still maintaining the uptrend. Oh, but Nathan, we could correct over here. Yes, we could correct more. But guys, any pullback to the 21-day EMA or maybe to the 130s support level would be totally normal, expected, and even desirable, because if you are on the sidelines like us over here, well, that would be the perfect opportunity for you to buy more shares, to buy Nvidia. Why would you buy Nvidia after correcting? Because you're going to buy near a support level. All right, buy near support level when the risk reward ratio is optimized. All right, don't buy near resistance levels, because if you see pullback in your face, then you can't complain. All right, so in order to mitigate your risks, try to buy near support levels, because even if you are wrong, you are going to lose little money. If you are right, you can capture a very nice bullish rally ahead. So the potential reward eclipses the potential risk. All right, you are willing to make way more money than you are willing to lose in the first place. Okay, so that's how we do. That's how we operate here in this channel. All right, and guys, remember, if you want to trade with us, I invite you to join the 5% project, our educational project. There I teach you our trading strategy and we apply it in practice every single day together. Every day I scan dozens, if not hundreds, of stocks, and I share with our members the best opportunities I see out there. There you receive clear signals and trading strategies. Following our method, I will explain to you where to buy, where to sell, the motivations behind every single one of our trades, and it is absolutely free to try. We offer you a 7-day trial period just to see for yourself. So come and trade with us without stress, without betting on the market, just using charts and probabilities in your favor. The link to our website is in this video's description. Okay, it's right here below in this video's description. All right, so you can trade with us over there. Now, we did buy Nvidia down here. We already sold it, all right, at a profit near this resistance level. It did go up a little bit more, but guys, as far as I know, again, any pullback could be just another buying opportunity near support level. Buy near support levels like here or like here, okay? Avoid buying near resistance levels unless you have a very clear strategy for yourself, all right? But following my trading method, I like to mitigate the risks while maximizing my profits, all right? And that's how we like to do, buying near support levels. And speaking of buying near support levels, Tesla is still near its long-term support levels over here, right? Because on the weekly chart, Tesla just did a pullback to the 21-week moving average, all right? Now, we are trying to react, which is, again, not surprising, all right? Last week, we saw a Dragonfly Doji candle pattern, which is a quite reliable bullish candle, precisely because it is above a clear support level, but right now we are having a very rough time in breaking the main resistance area over here, right? Near the 358, below the 21-day EMA, below the 373 over here. So we have yet to break a few key medium-term resistance levels in order to totally reverse any bearish sentiment, all right? And it is crazy to think because, guys, Tesla, since the previous peak, we corrected roughly more than 30%, all right? And this movement, a 30% drop, as crazy as this sounds, could be just another pullback on the weekly chart, because that's what Tesla has been doing, okay? We see Tesla bouncing, correcting, bouncing, correcting, 21-week moving average, bouncing, correcting again, 21-week moving average, bouncing, correcting again, 21-week moving average, okay? So we clearly have a support level near the moving average on the weekly chart. So it is looking promising. I'm not going to lie to you guys. It is looking promising, and I'm going to be totally transparent with you guys. I did share a buy recommendation in Tesla when it did hit our support level around 326 down here. It is right there on our Telegram channel, but it is not developing the movement properly yet, and that's precisely because we are still in bearish territory, all right? So if we see a breakout of this resistance level, Tesla will have everything to fly again, to seek much higher levels, but for now, we are struggling to break this resistance level again. The risk-reward ratio makes sense, and that's why we bought it, all right? That's why I did recommend to the members of the 5% project to buy Tesla over here. So, okay, even if we are wrong, we're gonna lose a little. If we are right, Tesla could explode way higher, okay? Way too much higher levels, all right? So, from our point of view, it is making plenty of sense to buy Tesla near support levels, not investment device, all right? Our buy signal was already triggered, all right? But it is looking quite good right here, right now. I do like Tesla. It is at least promising, okay? It is promising. I don't know if we're gonna be right or wrong. I don't care. And this is quite funny because our trading statistics, we have a win rate of 70%, okay? So 70% of the time we are right. The other 30% we are wrong, we lose money. So I'm not worried about on how Tesla is going to behave next. All that I know is that it has to break its main resistance levels next. Otherwise, it will repeat what AMD has been doing since October 2024, all right? We see AMD in a crystal clear bear trend. Right now, today, we see another bearish reaction. Guess where? Below our resistance level, below the 21-day EMA and below the 113, the previous support level, now clearly a resistance level. Another example of how the principle of polarity works in technical analysis. Now, by seeing another top signal here, AMD is completely frustrating, rejecting any bullish possibility over here. Okay, in theory, we are supposed to seek lower levels, maybe to retest the 106 again, okay? Maybe to seek the $100 again, because remember, the market has a thing for round numbers, so $100, that's a very nice psychological support level for AMD. So, as far as I'm aware, we could easily retest one of these support levels next. We are not bullish, we are still very bearish, we are still below these resistance levels, so AMD is not looking good right now. Oh, but Nathan, what if AMD breaks these resistance levels tomorrow? If it breaks, okay, maybe it is going to change our bullish case over here. Bullish case again, our bearish case over here, all right? But for now, we are not bullish at all. Okay, not bullish at all, not investment device, but we are not doing well over here. This could be another top signal below a double resistance level over here. So yes, it is looking terrible right now. I'm so sorry to tell you guys, but it is looking terrible. Now, Palantir. This one looks quite interesting because Palantir, yesterday we saw this bearish reaction, all right? And I told you guys, well, this could be a top signal. And guys, what did I tell you yesterday? If we see any pullback to the $100 area, to retest the 21-day EMA, to retest this support level over here, it is going to be just probably another harmless pullback and possibly another buying opportunity. Now, we see a hammer candle pattern above this double support level. According to Thomas Bulkowski's studies, guys, this is not investment advice, all right? But according to Thomas Bulkowski's studies, a hammer candlestick pattern reverses the trend roughly 60% of the time. And seeing a hammer candle pattern above a double support level is quite interesting. Okay, it is quite interesting. If we reject this pattern tomorrow or in the next few days by losing the 21-day EMA, by losing the $100 again, then all right, we are going to completely reject the bullish case on the daily chart, medium term wise, because on the daily chart we are still doing higher highs, higher lows, trading above the 21-day EMA. The 21-day EMA is pointing upwards, acting as a support level to us right now. So as far as I know, Palantir looks very bullish right now, in spite of this correction today, okay? Because we are dropping 6%. So you may say, Nathan, how's Palantir bullish right now? Well, I just told you, okay, we do see technical evidence suggesting a bullish continuation of this uptrend, okay? What if we see Palantir collapsing? Then it is going to turn bearish. Very simple, okay? It's very simple. There is no reason to panic. Real traders never panic in this market. Real traders never waste their time wondering what could possibly happen tomorrow or in the next few days. We just use charts, probabilities, and the technical analysis to do the right risk management, to do the right to build the right strategy in order to mitigate our losses while maximizing our gains. Okay, that's all that I'm saying right here, right now. So Palantir is making a bullish reaction above a double support level. That's all that I see. Now, Apple. This one is very close to our target. I gave you guys on the 5% project a buy recommendation while we were down here, okay, near this support level, near this congestion over here. Now we are going up nicely. We are very close to the 247, which is our next technical target. Now, we do not see any bearish signal yet. There is no top signal in Apple yet. If we see one, okay, maybe it is a time for us to back off, to take our time, to see how Apple is going to behave next. If we see another pullback, then we can buy again. But so far, there is not a single technical evidence suggesting a top sign or a sign of a top or a sign of a reversal on the 1-hour chart. For instance, if we see Apple losing the 21-hour EMA, losing today's low tomorrow, Friday, then okay, maybe we'll see a top signal in this area, and that would be very dangerous because a top signal near a resistance level is a sign of a pullback. All right, and now remember, any pullback to the 21-day EMA or maybe even to the 2027 down here could be just another harmless pullback because Apple is still maintaining the long-term uptrend. We still see Apple making higher highs, higher lows on the weekly chart, all right? So right now, we could see a pullback ahead, but we have to wait for more technical evidence to believe that Apple could correct. And again, any pullback could be just another buying opportunity, all right? Any pullback could be very, very good. Not as good as subscribing to this channel, because if you're still watching this video and you are not a subscriber, this channel is for you, my dear friend. You do like technical analysis, you like to study the market, and that this channel, maybe it is going to help you a lot because we are here every single day sharing analysis without bias, without spreading the panic, right? Without trying to make you panic or to get you euphoric over here. No, we just analyze the market as it is, and we react properly to what we see. No stress, no emotions, no gut feelings, right? No, nothing, only technique and strategy. Okay, so subscribe and click the like button to support our community. I highly appreciate your support. Now, Micron. You guys have been asking me to analyze Micron. Micron looks very interesting, not only because it is in a congestion over here, because we are in a long-term congestion, right? Between these two key points, between the 84 and the 114 up here. So we are inside a congestion, but we are losing momentum already. If we see Micron correcting back to the 21-day EMA or maybe to the $96 again, because the 96 is a quite interesting inflection point. It was a support level here before the gap, support level here again a couple of times, support level here, and when we lost it, it did work as a resistance level here, resistance level here a few times, 1, 2, 3, 4, 5 times over here. So right now, as far as I know, any pullback to this area over here could be just another buying opportunity to us, okay? Because Micron is inside this congestion, but right now, short-term wise, we are maintaining the uptrend. So I would like to see a correction ahead. Micron is not a buy right now, but it could be soon if we see the right reaction. Oh, so it is a sell right now. That's not what I'm saying. I'm saying that it is not a buy. If you are on the sidelines, okay, great, you can afford to wait, because guys, us retail traders, we can afford to wait for the best opportunity around. Sometimes you guys complain, oh Nathan, it's too boring, right? I mean, I want a more action in this market. You just wanted the easy boring trades. Yes, that's totally right. I just want the easy boring trades. Okay, I'm not here to capture the hard ones, okay? The hard ones, well, let's leave the smart money trying to get the hard ones, okay? We, retail traders, we gotta optimize the odds in our favor, okay? That's why I always look for easy, obvious trades, all right? That's how we do here in this channel. Now, ARM Holdings, losing the 21-day EMA, it is not looking good. It is on the weekly chart. We are still maintaining the uptrend. We are still above the weekly moving average, okay? So if we see any reaction in this area, we could see a nice buying opportunity, but there is no technical evidence supporting a bullish case right now. So we are not looking good medium-term wise, but if we see a bullish reaction on the weekly chart, that would be fantastic, okay? We just gotta see ARM Holdings reacting better near this no man's land, okay? Because right now we lost the moving average, and we have another support level at 142, so we are still quite far away from this support level. We could drop more, so right now it feels like we are in a no man's land between the moving average and between the 142. So I don't see any crystal clear buy signal right now, but if we see one, okay, that could be very good. Again, I'm gonna keep you guys updated on this channel, so remember to subscribe, click the like button, and remember to join the 5% project if you wanna trade with us, all right? I highly appreciate your support, my dear friends. Thank you very much. Stay safe. See you guys tomorrow.